Okay, good morning, everybody. Thanks for joining us today. So today I'm going to talk about Skeena's two assets, our flagship asset, Eskay Creek and Snip, both in the Golden Triangle of BC. I will be talking about some forward-looking statements here today, so please look at the statement here. Okay, so Eskay Creek and Snip are both located in the Golden Triangle of BC. It's northwest BC. There's a couple of producing assets there right now, both owned by Newcrest, Redcrest, and Brucejack. Snip and Eskay Creek were both former producing high-grade gold mines, and we're looking at doing something a little bit different with them. There's also a couple big projects nearby. There's a lot of mineral wealth in the area. In terms of the management team, first of all, Walter Cole's also here today, Executive Chairman. He's really the one that's responsible for getting the company where it is at today and making the deals in order for us to get these projects. He's an investment banker out of New York and joined Skeena in 2014. Myself, Randy Reichert, came on board about a year and a half ago with Skeena, and my background's really in mine operations and developing projects. Also want to quickly point out Naylene Morin, VP of Sustainability. Naylene joined us a year ago. The importance of Naylene is she is Tahltan, that's the First Nation in the area, and she was, for the last 12 years, on the kind of the other side of the fence in their lands department, and she's really our person that's going to take the permitting and environmental studies in through. Okay, so Eskay Creek, located, it's northern BC, but incredible infrastructure in the area. First of all, there's a paved highway that goes up to within 50 kilometers of the property. And then in the years between when Eskay Creek was operating, it shut down in 2008, and now, there were 3 hydroelectric facilities that were created in the area, spent about $2 billion building those. The closest one we can tie into is about 17 kilometers away. Sorry, one last thing, and we've also really grown our land package in the area, and we're confident we see some excellent mineralization in some of those other areas, so we're excited about getting into those. Now, historical production. So this, when it operated from 1994 to 2008, was one of the highest grade producing mines on the planet. 45 grams per ton gold, another 2,200 silver. Katie, our director, has actually recently gotten some inquiries wondering if that was a typo or not, and we can assure you it's not. It's well known, and it was mined at that grade for about 14 years. 3.3 million ounces of gold and another 160 million ounces of silver were produced. It was a small underground operation operating at about 400 tons per day. Our plan is really to now move that into an open pit, much bigger mine. Okay, so when we look at reserves and resources, a couple things to point out here. First of all, we had an updated resource recently that incorporated more drilling. We also went back and changed a little of the modeling. But in terms of the past feasibility study we put out, we've got a total of 3.85 million gold equivalent ounces at a grade of 4 grams per ton. The other thing I'd like to point out of that, 2/3 of those ounces are in the proven category, which is kind of a bit of a unheard of at this stage in a mine life for an open pit. If we look at the feasibility study that we put out a year ago, you see very robust economics. Base case gold, 1,700, and silver, 19, gives us 1.4 billion NPV, 50% IRR, and a 1-year payback. Annual average production is about 350,000 ounces, but in the first 5 years, it's really over about 430,000 gold equivalent ounces. It's also got incredibly low costs at $652 an ounce all-in sustaining costs. Now the mine life, a bit short, 9 years. We're updating, doing a DFS as we speak, and we expect that life to grow. CapEx, about 450 million US or 600 million Canadian. So why do a DFS kind of just over a year after we've just put out a feasibility study? Well, the fact is, when I joined the company, I really saw that there were things that I thought could be optimized and improved for the project, but really just didn't have the chance or time to put those in. One of them was how we had done some modeling for the resource. We had increased the block size based on increasing or doing less selective mining. The fact is, we will mine this more selectively, as a high-grade open pit gold mine should be. And that's going to really end up pushing a little bit higher grade through the mill. The other thing was in the metallurgy, was a fairly complicated circuit, but in one particular aspect, the flotation stood out. So we brought in a new consultant early this year. They've made really good strides. They were able to, just by tweaking the reagent dosing a little bit, create a concentrate that was over double or around double of what we were getting in the feasibility study. So that really plays to, you'll see in the DFS comes out, should give us a lot better payabilities in the DFS. In terms of the project, here's how it looks right now as it's planned. So open pit, big stockpile area, and then the processing plant. So it's a pretty tight site. There's also a permanent tailings facility. Just zooming in, this shows the mill as it's planned today, the crusher over to the left, followed by the stockpile, and then the feeding into the mill. It will be a flotation concentrate that's produced in this. The other thing to note, there's a permanent tailings facility. So the last year and a half of operation, Barrick used this facility, so they were kind enough to help us a lot. This is a permanent tailings facility, subaqueous disposal of both tailings and PEG waste. And then just showing, so we've actually started a bit of earthwork. So this shows just a shot of some of the earthworks that we've been doing this summer. This is flattening out a bit of the ridge just to give us the place to put the mill and the other infrastructure. Just looking at the timeline now. So the number one thing here, just point out, production, right. That's not working. So Q1 to mid-2026 is when we expect Eskay Creek to be up and running. How do we get there? Well, there's a number of permits we've already got in from the existing operations. That allowed us to do some of that work we were doing this summer. So we did a permit modification, and that allowed that. We're doing a JA1 permit, which allows us to take a bulk sample. That allows us to get in and start the pit. So by using those, we can do a lot of the construction ahead of the final permits, of which right now we are going through the environmental assessment process. We expect that application to be in towards the end of this year, beginning of the next year, and then following that, about 1 year later, receive our environmental certificate. Following that, another 3 or 4 months, and we'll have our final permits, and we can finish off the build. But in the meantime, we're going to do quite a bit of work. We're going to set up a warehouse building that will effectively become the mill building, and we'll do a bunch of other earthworks. We get in and get the ramp up into the pit, get the pit work started, get haul roads out into the Tom McKay facility and the camp pad and some of that work. So we're really progressing this as quickly as we can. Recently, we put out a resource on Snip. So not too long, earlier this year, we kind of got this back. Hochschild had done a joint venture or an option agreement with us for this. We were glad to get this back. We see this as being a bolt-on addition to feed Snip ore mined at a fairly slow rate underground and truck to the Eskay Creek facility for processing. What we see this as being a good higher grade addition of ore, much cleaner than ore than the Eskay Creek. So it'll improve both the economics, bump up the production of the ounce, but also give us a little bit better concentrate. And we see this as kind of being mined over an 8-year period, feeding in and bumping up some of the early ounces, but then filling in some of the back end ounces where we're a bit light. We expect a study on this to be done somewhere in the Q1, Q2 of next year, a PFS level study. Okay, so what really gets us excited these days? Well, it's really the exploration opportunities, both near field and far around the Eskay Creek property. So when we first got this, the whole emphasis was to drill this off in order to get it into a feasibility study and get really the permitting. So permitting in BC takes a while, so it was important for us to get that started. We knew that there was huge exploration potential still in this area. We had some good successes last year, and we see that in the resource update. But really what's getting us excited is looking for the next Eskay Creek deposit and the very high-grade mineralization that was historically mined. So when we look at this slide, we see that on the bottom left corner, the mudstone unit, everything that was mined previously, just kind of ended. And why did it end? Well, there was a lot of drilling done, along strike down plunge of the deposit, but we did some airborne magnetic surveys a couple of years ago, and it really started showing that the basin where the mineralization started, so it's an exhalative deposit, and where that material is typically captured in this basin looks like it was faulted off to the northwest. So that's what we started drilling, and we drilled a couple holes late last year. What we see, one of the holes missed, nothing in it. The second hole, though, we intersected 4 grams per ton equivalent over 32 meters. It was in rhyolite. It wasn't, the main mudstone package that holds the 50, 60 gram material that we're really looking for. But what it was really showing us is that the feeder system, the system is alive out there. And just as importantly, the kind of signature that we're seeing of the elements in that hole is very, very similar to what we're seeing in kind of the south end of the deposit. So, our geologists are excited. They think that we're getting close to where we could see the exhalative event. So this summer we're drilling about 14,000 meters of drilling, putting in about, I think it's 15, 16 holes, really looking for that 50, 60 gram material, that extension of the Eskay Creek high-grade deposit. Of course, this is at depth, so it's 850 meter depth. We hit that, so it would be an underground operation if we find something. Now, just upcoming catalysts. So, our expectation is that Eskay Creek feasibility study was great, but we believe that we can still grow a lot of value out of this. Eskay Creek resource update was completed already. Snip resource update was completed. We expect to start seeing some results from our exploration this summer shortly. Then we tag on the metallurgical and process optimization that we've done at Eskay Creek, along with now the DFS that should be out by the end of October, along with a Snip engineering study. So, our expectation is to take this from a 1.4 billion NPV up to, hopefully above 2 billion. Okay, in terms of capital structure and analyst coverage, it's here. See a couple today. Michael Gray's out in the front. That's it. Ovais as well. Thank you.
Thanks, Randy. Any questions from the audience? There's one question in the front over here.
Randy, thanks very much. Great presentation. Just, I may have missed it because I came in a few slides late, but can you touch on Taltan relationship with Naileen Morin in an executive position, and what that's meaning to the permitting process for you in that collaborative arrangement with the Taltan.
Sure. So it's Naileen, but we have excellent relationships with the Taltan First Nation. So that is the nation where Eskay Creek resides. It's one First Nation. Walter has done an incredible job at building relationships over the last 6 years with the Taltan. So that's an important part. There's a bit more to it. So going through the EA process, they're actually now a signatory to an agreement that was made with the BC government that gives them direct input into the EA process. Naileen Morin is important from our side because she knows that process very well. She knows the Taltan values, and we've been working very closely and jointly with the Taltan for a number of years at Eskay. So even before Eskay started, when we anticipated it looked like it would be a good open pit project, we went to them first and got their thoughts, and they were comfortable with it being an open pit. And then there's been a lot of other things. So we've been working closely with the Taltan for a number of years on this. They're a good partner.
We have another couple of minutes for another question. Go ahead. In the front.
Yeah, just have to ask about the exploration, Randy. I know you're not a geologist, but anybody who was on the site visit got to see the core. I think it's 1081, the deep hole. It was released last year with 4 grams gold equivalent over 32 meters. And maybe internally, as a proxy for another high-grade Eskay, I mean, that footwall looks like it is exactly what's under the mine. You just don't have the VMS horizon there. Yeah. How is the team going to navigate it to find that the next underground Eskay high grade?
So there's a few things we're doing. Obviously, we're drilling some holes nearby. Those holes are deep, so we're going to wedge off those holes, and some of it is scouting out that way. We've recently thought about doing some seismic work there to really try to identify where, what we're looking for is a mudstone layer, quite a bit softer than some of the surrounding rocks, and where it's thickest is really where we need to target. And so we're looking at probably doing that early next year. But that said, we're still hoping to have some interesting results this year as well.
And Randy, just to follow up on Michael's question, in terms of, let's say this does turn out to be an underground deposit, where would it kind of fit in with your current mine plan? What's the kind of initial thinking over here?
Yeah, so as I mentioned earlier, the first 5 years of production is very robust. In the 450,000 gold equivalent ounces per year, we expect with Snip that's even going to go a bit higher for a few of those years. It's the back end years that we want to fill in. So and we also expect there's quite a bit of other material lower grade. So in the later years, a high-grade underground deposit mining at a slower rate would make the whole operation much, much more profitable with those high-grade ounces really bumping up the ounce count. So our overall cost per ounce then dropping significantly. And that's the whole premise of it. So it would be in the, probably in the years 6 through 12 to hopefully 15 plus.
Thanks, Randy. We're out of time, but great update. Thanks so much.
Thanks, Sylvain.